All right, been a while since I've done a stock analysis for you guys, but I'm back. I'm ready to do them every day. The stock market's been moving a lot lately, so I think it's a good time to start going over the individual stocks. So looking at ACN today, earnings came out, so it's gapped. I'm gonna go over the technicals and the fundamentals, and hopefully I can do it within 5 to 10 minutes. So we'll start with technicals. So looking at this chart, it did break below this swing low. This is on the daily. There's two imbalances here that I want to highlight because price likes to always come back to imbalances. It'll always fill these if given the right market circumstances. But so 330 and 352, there's these daily imbalances. And now price gap most likely will fill this gap. If not today, then maybe tomorrow. Today is Thursday, so uh, maybe tomorrow, maybe next week, but most likely this gap here will fill, and it only gapped because of earnings. So just delete that for now. We'll keep this in mind. So technically, because it broke this daily swing low, it would be bearish. If we go like this and we look at just a basic Fibonacci, I only have the 50% and the 618 because those are the most common levels where price retraces to. You can actually see that the this 351.99 daily imbalance is right in between. Oh, there's actually another daily. Hang on, I missed one. There's another daily imbalance right here. So mark that too. Didn't even see that. All right, we'll fib this section again. We'll fib this whole thing just to get a full perspective here of this entire leg downwards that broke this swing low. So if you look at this daily imbalance, 351.99, it's right in between the 50% and the 618. So the chances of price coming back up to here, very, very likely. So currently at 303. So from 303 to 352, after price fills this earnings gap, it might actually pull down. It might fill this gap here. Maybe do a slight pullback. That might be a little much. And then head back up to here. If we look at the monthly, what I like to do is look at the ranges. So on average per month, look over here. So this month it's already moved $60, and on average, sorry, it's hard to see. It's already moved. Got to get this thing out of the way. So it's already moved $60, and on average it moves 44. So it is March 20th, and it's already moved over 30% more than it, roughly 30% more than it normally moves in a month. So there's a good chance that it starts to pull back upwards, just like everything else we went over. So this is the move I'd be looking for price to, again, first fill this gap, pull back, and then target this 352 imbalance right in between this 50% and 618 retracement. I think that's very high probable. And now if we're looking for an entry, I like to go on the lower time frames, and I would just wait for, we'll delete these so it's easy to see. I would wait for just for structure to build. So this is the 1 hour. All you want is ideally breaking these highs, but if it creates a lower high that down here, let's say, and then pulls back and then breaks that high, then you're good to go. But as of right now, this would be your, you wouldn't enter until, let's say, 325, but that's quite a bit away. So I would wait for it to create another high that's lower than these, and then have it break that high. So, and then whatever you guys think is your ideal risk to reward, I have mine, but everyone is different. And then so wait for it to create another high and then another low, break that high, and then you can set your stop for that low. So it'd be something like this. Obviously, this is terrible risk to reward at 0.75. I mean, each to their own. I would never take that, but it would look something like this. And I do think it's very probable. I do think price is going to come fill this area. So that's the basic technicals. Now we are going to go over the fundamentals. So I'll just put this back on the daily. So let's look at these fundamentals. So first thing I always look at for every stock is the PE ratio because it's non-negotiable. So anything over 30 is high. I don't care what anyone says. If it's a tech stock, growth stock, this stock, anything over 30 is high. It doesn't mean people won't pay it. I mean, Amazon was at over 70 for a long time. Tesla's been in the hundreds, so people will pay it, but it's still high. So this at under 30 is good. 15 is like fair price. So 15 is fair price, 30 is high. So it's in between that right now. They're profitable, so that's huge. Like you'd be surprised on how many businesses or how many companies are not profitable. People still buy them, which I would never do. But um, it's profitable. It's fairly priced, so that's nice to see. If we look at income statements annually, it's healthy. Like it's been positive for a long time. So revenue's going up, so that's good. We'll go back to that for a little bit here. Profitability per quarter is fine. So that is a lot of employees. Holy. So yeah, I mean, as far as buying this stock based on technicals and fundamentals, I think it's good. I think your first target would be just filling this imbalance. So if we look here, this was the low. Actually, we'll go from here. So this is where price closed on yesterday at 324. So technically, this whole gap here needs to be filled from yesterday's close till today's open, and then because of earnings, a gap. So that'll ideally fill first, and then pull back, and then target that. So first target would be just 324 straight up. I mean, you could buy it now. It's a good buy. Like I said, the PE ratio, it's fair-ish price. It's not cheap, but it's not overpriced. So it's because it's below 30. So I think it's a good buy. I think it's a good buy to 324, and then 330 being this daily imbalance, then 342 with this daily imbalance, and then eventually 352 for this daily imbalance in between the 50% and the 618 of this leg. So hopefully that makes sense. Let me know what you guys think in the comments. Let me know what other stocks you want me to go over. I'd be happy to do so.